Um, do you have any gold in your portfolio? What is your security? So balance should have no bias. So as your starting point with these things considered, and then when you also put in an element of gold, there's not a credit issue, you know, and there's not gold is the asset that the one in a sense wants to own when there's a question of owning the value of money. Money is debt. Now it becomes more challenging because as you have to focus in that, it's not the good old days. That doesn't mean don't have money in the United States, but think about the tech stocks. Tech stocks have been, um, great investments. Don't concentrate on tech stocks. Okay, I'm not trying to say okay, run and go do that. As I think about it, for example, I think about what are the ones that are assets that are going to be diversifying well. How much inflation index bonds do you have? I particularly like leveraged inflation index bonds to balance. Do you have any gold in your portfolio? What is your security? So balance should have no bias. So as your starting point with these things considered, you see, when you're owning an inflation index bond, if the real rate goes down, then you get it appreciates. So not only do you have inflation accrual, but you also have the decline in the real rate causes the price to rise.
But that's also at a time when the central banks are reversing course and cutting rates. So that's a very important point because you would get that real rate compression and you get the inflation
Without credit risk.
without credit risk because it's the government's obligation, right? And that actually it's not you can't and they can't monetize that away in the same
That's right.
right because that would result in inflation and
That's
you
right.
get that.
That's right. And then when you also put in an element of gold, there's not a credit issue, and there's not gold is the asset that the one in a sense wants to own when there's a question of owning the value of money. Money is debt.
Yeah.
You hold
Yeah.
debt is how you hold money. So when you have that set of circumstances, just from a tactical point of view, leveraged inflation index bonds, not so they're having a high volatility, but leveraged inflation index bonds and gold diversify themselves without credit risk.
Yeah.
Okay. Now, this is not something that people do.
Right.
Okay. But if you look at the structure and behavior, and I'm not saying put a lot of money like, oh, run out and go do this. I'm saying, okay, when you think about how to diversify your portfolio without credit risk, okay, or then when we deal with tech stocks and so on, there's so much concentration in those tech stocks and so much uncertainty. I've been through dot-com bubbles and so on.
Mhm.
We can find ourselves in one of those. So it's not mean pile into those, okay? Have some of those. But the point is, how do you maintain a real return, a positive real return in that environment that also has threats that are not just market threats, they're taxation threats, they're foreign exchange threats, those kinds of things. Okay, we see these cycles, and the cycles really are almost marked by wars, because at the ending stage, you have a war. And then you have a lot of destruction, writing down debt, and so on, and you begin. So you can follow this cycle starting really at the end of World War II, right? So what you have in the beginning is internal order, productivity, and so on. But over a period of time, debt rises relative to incomes, and debt is money. One man's debt's another man's money. And as that rises over a period of time, there's a lot of borrowing, and then that produces a economic and cycle related to borrowing, the great wave in a sense. And of course, that carries a lot. So we have that cycle. Late in a cycle, you have a lot of debt relative to income. Debt is one man's buying power. And so there is an issue there. Okay, that's part of the cycle. Through that uprise, you also have increased gaps in wealth. And, that's the nature of the cycle. So it distinguishes, but these large wealth gaps enter into the picture. And so you see internal conflict that starts to emerge. So that's why you see in the 30s, you see 4 civil wars. I won't go through them, but
Yeah.
basically that conflict, when those are both happening together. Usually the internal conflict then precedes number 3, which is the external conflict. In other words, there's a great power conflict in the world. Once there's a winner of a war, there's a dominant power. And then there's order for the reasons I described. But over a period of time, that dominant power may lose relative power to other powers. And as a result, there is a great power conflict during this period of disruption when you have economic problems combined with then the political problems that I'm describing internally, political and social problems. Okay, so those are the 3 that really make a big cycle. We can call that the big cycle. That big cycle will vary, but it typically is a lifetime, something like 80 years, roughly speaking, but it varies.
Correct.
Well, yeah, think of it as that they're currents, okay, and that they coincide, generally speaking. For example, if you have a debt crisis, then you probably have an internal order crisis
Yeah.
because of money and the impact. And then that relates to an external order conflict. So these cycles tend to go together. And then, as you say, there's number 4 is the weather, the impact of climate and those types of things. And then through it all is man's inventiveness. In other words, that keeps rising at various paces, but that notion of evolution toward higher levels, which is the 5th force, technology in particular. Classically, the private sector gets more and more indebted, and the public sector, particularly governments with central bank supports, take on the debt. So what we've seen is the government debt rise a lot.
Yeah.
So the economy is less sensitive to that because the government is taking on the debt, and the central bank is supporting that effort in one way or another, right?
Yep.
So what we see is still that pattern in terms of the rising debt to GDP. And of course, that's caused the issues that we have now with inflation and other influences. So we're still seeing on a cyclical basis, total debt relative to GDP continuing to rise near its high. And then we deal with the debt service cost, which is a function of interest rates. So as the central bank puts the money, tightens the money, and then starts to squeeze the economy in a very classic way, then you see the economy slow up as that debt service, and then you go through the other leg of the cycle. So there are these short-term cycles, which we call recessions and expansions. There have been 12 and a half. We're now halfway through the short-term debt cycle. So that's the power. While the government then takes on that responsibility because it has the greater capacity. Let's say if the central bank loses money, it doesn't appear to be a problem in the early stages. Later stages, it can become a problem. So I think when you look at it, Japan is a very good example of this. Debt, one man's debt is another man's asset. That has declined by about 90%.
Right.
If I'm holding a debt asset in Japanese yen, it has declined in value by about 90% relative to a US interest rate in terms of the real depreciation, 90%. So what a tremendous loss of wealth in terms of writing down that debt in that cyclical way. It's the accumulation of the foreign exchange rate and the interest rate differences.
Right.
In other words, there's been about an average of about 3% interest rate differences.
Right.
So over 15 years, those 3% add up to a lot, right? Then you also have the depreciation of the exchange rate. So it's both the interest rate differential and the depreciation of the exchange rate. I think it's important to understand that the debt assets, even for the United States, which was the better place to have debt assets, was losing. The debt assets were losing. And they lost to inflation. They lost in nominal bond terms. You lost money. The relative loss of the value of money and debt in Japan was much greater, but they all lost money. And now, as we're going forward, the issue is really there's too much debt, and one way or another it has to be marked down, and you're not going to default on the debt. So there will be a marking down of the real return of that debt. I believe that's the classic cycle.
Mhm.
I'm describing there are five forces, I say,
Right.
okay?
Yep.
That last force, which I'm talking about, productivity, in other words, the advances in technology and productivity, that are the force, is a very big positive force. If you look at the five forces, the debt money force, that's a negative for wealth.
Mhm.
If you look at the internal order and disorder force, okay, that's a threat in various ways, taxes, politically, and so on. You look at the external order and disorder force, that's a problem. But if we look at and climate, and the impact of that is very, very costly, about $8 trillion a year in a world economy that is $100 trillion a year.
Right.
So it's a big, expensive thing. Those four forces are problems, are difficulties ahead, but we have the most amazing technological breakthroughs. And so I think as we think about how the impact, this other force for productivity is a great, great positive force. Although it can be, it depends how it's used. You use the technology, it can be a two-edged sword, but the impact in terms of productivity. So I think the real question is that impact. So where the United States is succeeding very well, and this is a real plus, is through that. However, when we look at that keep in mind that basically it is 1.5 million people out of 333 million people
Mhm.
that are in that sector, that are leading that way, and half of them are immigrants. And so what we have is this amazing dichotomy between those who are in that part of the inventiveness with the unicorns and everything. And at the same time, we have this massive population that, let's call it the 60%, the
Right.
lower 60%. And so that creates this internal political force. It's the classic cycle. It's the power and threat of capitalism.
Mhm.
The capitalism distinguishes the most productive. This is particularly important now in our technological age. A limited number of people can have the most productivity. That's where it's coming from, and this vast majority don't. And so the capitalism rewards that and so on, and creates the wealth gaps, and then that becomes generational. The children of those who are the wealthy get the better education and so on. This has happened through history, but this is really a classic one of those, and that's the set of circumstances that we're in. Don't look at averages.
Okay.
Okay, averages are misleading. If you watch the cycles, I laid it out in my book.
Mhm.
Okay, the changing world order. It's like there is a diagram practically that you can follow, and it's following that diagram, right? So yes, as you have greater polarity, you have less compromise, you have a win at all cost mentality.
Mhm.
Okay, now there's no compromise, and you're having that in a deteriorating environment, and so that's what you're talking about.
Right.
Okay,
Right. Is your
at the
biggest
same time as this productivity miracle is happening to one and tending to exacerbate that. I mean, I don't want to say anything in a black and white sense. There are always little parts of this, but by and large, that's what the picture looks like. There are the two sides, and then there are the neutral. So, and then in a war, in a conflict of the sort that we're having, fortunately hasn't been military of the major powers,
Mhm.
but we have other powers in conflict. What you see is there, at the end of the day, there are the winners, the losers, and the neutral countries. The winners lose.
the winner?
The
Right.
losers lose
Mhm.
terribly. The neutral country are the real winners. And so you could see that dynamic playing out. Okay. You're seeing essentially a war, and at the same time, you're seeing then the neutral powers, the ones that are not involved. So you're seeing India, ASEAN countries, and so on come up and flourish because they're at the part of their cycles, economic cycles,
Mhm.
when they have enough money to have capital formation. There's a cycle for development. I think there are four stages. Okay, when you're a poor country and you can't have any capital formation because you don't have the money to have capital formation, you're poor and you recognize you're poor. When you get enough money that you can have capital formation, that you can build roads, that you can have other forms of capital formation and improve yourself, that state of mind, when you know you're poor, means that you don't waste that money. You put that into productive uses. And so you're seeing building of infrastructure. And so you're seeing that happen in a number of countries, in India, in Indonesia, into the countries that I did that survey of
Yeah.
what countries are going to grow the
Which
most.
we just published that.
Yeah,
So,
yeah. So you see, that's the takeoff point. Okay, and then when they have neutral countries, geopolitically, that is a very good situation. Then there's that rise. So the second stage is you're getting richer, but you still think you're poor. You have that mentality. Third stage is that you're getting richer and you start to realize that you can enjoy life and you don't have to work 6 days a week
Mhm.
and so on. And then you begin to enjoy life more. And so you're still rich, but you start to realize you're rich.
Mhm.
And that's the mentality.
Mhm.
Then you go to the next stage in which you start becoming poor and you start to think of yourself as rich. So you're borrowing the money and you're living on living standards. And because you're the rich guy, they lend you the money, that kind of thing.
Mhm.
So if we're looking at these emerging countries, many of these emerging countries that are neutral in this conflict and that are also at these takeoff points so that they can have capital formation and so on, you're seeing them like India, like Indonesia, some of the ASEAN countries,
Mhm.
that they are doing well while the other countries are in this conflict. The United States is doing very well for the inventiveness, of course, and the productivity. Terrific. And at the same time, it has its other issues that we've just talked about.